Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Welcome to Driving Alpha, the podcast where we dive deep in the world of venture capital. I'm your host, Steve Brotman, managing partner of Alpha Partners. On this show, we explore the personal histories and unique investment strategies of some of the most influential VCs in the industry. We uncover their journey, discuss their investment philosophy, and learn about the deals that have shaped their careers. Today, I'm thrilled to welcome Laura Chau, a partner at Canaan, to our show. Laura leads the consumer technology investment practice at Canaan, one of the oldest and most respected early-stage venture capital firms in the industry. With over a decade of experience in venture capital, Laura has established herself as a prominent investor in the consumer tech space since joining Canaan in 2014. Laura's impressive background includes an undergraduate degree in management science and engineering from Stanford and an MBA from Stanford Graduate School of Business. Before her venture capital career, she gained valuable experience as a management consultant at Deloitte and was one of the first employees at Kabam, which was later acquired by Netmarble. As I mentioned, Laura has made her mark with notable consumer tech investments in companies such as Clutch, Ollie, Mischief. Her expertise in consumer tech has been instrumental in shaping Canaan's portfolio. Speaking of Canaan, the firm has been a powerhouse in the VC world for over 33 years, managing over $5 billion in assets and achieving more than 190 exits to date. I'm excited to delve into Laura's journey, her investment philosophy, and the experiences that have shaped her successful career in venture capital. So without further ado, let's welcome Laura Chau to Driving Alpha.
Thanks, Steve. It's great to be here. It's always fun to chat, and thank you also for everything you do across the ecosystem.
Thank you so much. It's fun. This is one of the fun parts of my job is I get to chat with folks like you. And part of what inspired us to do Driving Alpha is we do about 40 to 50 venture calls per person per month. And I just thought, you know what? A lot of the stuff we talk about on these calls is so cool. Let's share this with our audience, and I'll get into it a little bit. Well, let's start with your backstory. Where did you grow up and how did you ultimately get into venture capital?
Well, I can tell you, I definitely didn't grow up hoping to become a VC. I had absolutely no idea about venture. I didn't really know what a startup was. I grew up in northern Florida as the daughter of refugees from Vietnam. And so all growing up, it was like, you're going to be a doctor or an engineer, maybe a biomedical engineer. Like those are the only options. So when I ended up at Stanford for undergrad, it was really my first foray into the entrepreneurial ecosystem. And I really fell in love. I found Silicon Valley to be really intoxicating in such a fun way, where you saw all these entrepreneurs just building and dreaming and making things happen. I thought that I would go off and join a startup, but that kind of immigrant mentality from my parents led me to go somewhere very safe. And I did the engineering degree. I decided I didn't want to be a doctor. And so the risk averse path was to go to a management consulting firm, and one that was a big four consulting firm or audit firm that my parents understood. So I went to Deloitte. I did that for a couple of years. It was a great experience, but ultimately knew that's not where I wanted to be or where my heart lied. And then again, thought I was going to go back to a startup or find a startup that I was excited about. And in that path, I kind of fell into venture. When I was in college, I had worked at a bunch of startups, and one of those was, at the time, a startup called Water Cooler. It was like 15 people above a dim sum restaurant on Castro Street in Mountain View. And they were building kind of affinity groups on Facebook. This was Web 2.0 before apps were even a thing. And I worked there. I thought it was the coolest thing. And as I was starting to think about my next steps after Deloitte, I was talking to the CEO there, Kevin, and he introduced me to Canaan. Canaan had actually incubated Kabam back starting in like 2006. And so I ended up chatting with the team at Canaan. This was almost 11 years ago. And they were looking for someone. It was a great fit, and I haven't looked back. And so I didn't expect to be here, 10 plus years later, but it's been an awesome ride, and a lot in between has happened.
So are your parents disappointed?
Yeah, every now and then, my mom still doesn't understand venture fully. And she's like, you could still go and do a post-bac and go to med school. And I was like, that sounds nice, but that's definitely past at this point.
That's funny. I've heard lots and lots of stories like that.
Yeah, I'm sure.
But interesting. So you've been there over a decade. You want to share like one or two companies that, or something that you've done recently that you're excited about?
Yeah. So just as maybe quick background, Canaan, large early stage venture fund.
Yeah.
We primarily do seed and Series A, a little bit of Series B, all leading those investments. And across the fund, we're pretty generalist, but individually we all specialize. So I have partners who do a lot within fintech, within prop tech, enterprise SaaS, infra, security, frontier tech. And then I lead our consumer tech and commerce tech practice. And that's really anything that touches an end consumer or is enabled by consumers. So I look at a lot of marketplace businesses, kind of true consumer internet, e-com more on the enablement side or platform side, and certainly a lot of consumer AI over the last year and a half, 2 years. So almost all of the deals that I did last year have some element of consumer AI, and can certainly get into why and what we like about those things and differentiation. But I'll share a couple of the companies that we did, and all of them are tackling different verticals, but leveraging AI in unique ways. One is a company called Nagish, and it's an accessibility app for the deaf and hard of hearing community. And what they do is provide a true platform for transcription and communication if you are deaf or hard of hearing. The really cool thing about this business is it's one of the only AI-enabled ones in a very regulated industry where it takes years to get certified. The FTC manages that fund. It's free for users, but again, managed through the government. And it's like a 20x better service. All the other things are basically managed by humans in a call center. So if you're deaf, you get a dedicated phone number. I would call you if I'm deaf, and there's a person sitting in between our call typing out what you're saying. So it takes like 10 seconds to pop up on my end. It's 60% accurate. And that's how I have to take a phone call, right? For anything with a hearing person on the other end. So this company, Nagish, is making communication democratic for everyone. It's accessible, it's universal, and it's just an amazing, amazing team. So their use of AI obviously is one that's bringing a lot of good to the world, and also just doing it in a much better way. Led another company called Solvely, which is in the AI edtech space. We've looked at edtech a lot in the past, and you and I were actually talking about edtech end of last year. And one of the things that I've been thinking about in this category for a long time is that, edtech has been a little bit, not out of vogue, but to invest in for a lot of traditional tech investors, because either they haven't traded super well in the public markets, the content has been expensive, or the go-to-market via school districts or our parents has been tough. With this company, they kind of turned all of that on their head. And I think AI in general has really changed the game, where content is now not the issue, right? Like you can generate content, quality content, or help kind of clarify a lot of content in a really low cost way. And it's getting cheaper and cheaper with new models coming out. Here, it's all about being able to deliver a much better service. And we have a massive teacher shortage in this country and abroad. We have so many opportunities to improve education, and Solvely has really proven that they're doing that primarily for college students. So they sell directly to college students, initially helping with homework, but now really kind of helping to be more of a personalized learning platform for them. And so 2 examples of different flavors of AI, and then also did one in the e-commerce space, which we haven't announced yet, but kind of like an AI Etsy. So using AI for the design aspect, in tandem with kind of a full supply chain and e-commerce experience underneath.
Interesting. Are you worried at all about sort of your incumbent companies that might not have been born in the age of AI? Like, oh no, what are they going to do? Like, are they starting to get it and like incorporating it? I was just curious.
I think if any company that was not born in the age of AI is not thinking about AI, that's a problem, right? There are certainly some sectors that are going to be more operational, kind of service oriented, where AI doesn't have to be core to what they're doing. But I think every company, if they're a strong team, and I like to believe that we're only backing strong teams. They're all thinking about it. But, we talk about it a lot where there are an ilk of companies that are starting to get outpaced even by foundational models, right, of just the basics of what are out there in AI. And so some of that's conversations around pivoting product. It's about developing in a different way at this point, or kind of rethinking some of the go-to-market to make sure there's like true product market fit. Because the rate at which we're seeing companies get to their first million in revenue is kind of astounding, right? Like the number of companies out there that are getting there within, 6 months. It's pretty wild.
Yeah, I just saw a stat that said traditional SaaS companies, it took about 6 years to get to 20 million in revenue. It's now taking 2 years for some AI vertical
Mhm.
SaaS companies to get there, which is that's mind bending for folks like you and me who've seen a lot and
Yeah.
never see anything like that.
I have 2 companies in my portfolio, like AI native companies that have gotten to, 6 to $10 million in revenue in under 18 months for sure, close to 12 months in some of those cases.
That's amazing.
Yeah,
That's
it's just a
amazing.
different world.
Where do you think the alpha is being generated on the consumer AI front? Is there a pattern that you've noticed just yet? Or just curious if you've identified anything there?
Separate from sector within consumer, one of the
Mhm.
things I've been really thinking about is that I really believe that go-to-market and marketing expertise, distribution are actually the differentiators and sources of alpha today, right? Similar to what we were just talking about, the rate of development and the model layer within AI is quickly becoming commoditized. Most of these consumer companies are leveraging all the different models, are kind of hot swapping them in and out. And it was kind of a dirty word to be a wrapper, right,
Mhm.
around any sort of LLM or GPT. But I think it's now winning on UI for sure, but go to market, right? And if you are a team that has really deep expertise there or some sort of structural advantage within your go to market approach, or really deep network effects and are either first to market or kind of building out like B platform, that's where I think you're going to see the separation between winners and losers. A great example, we led the seed in Fireflies, the AI note taker. I mean, there are a bunch of AI note takers that have come out since, but that's a company that has just continued to be on the tear. One, they were really early in terms of LLMs and AI and were building some of their initial models themselves in the beginning. Now that model layer has become commoditized. It's much more about the UI and the platform you build around it. They're also first to market, have been really, really thoughtful about how they acquire users, retain them, and then kind of spread within organizations. And that type of go-to-market expertise is a big part of what I look for on the consumer side now.
One of the things that's been confounding a lot of firms over the years has been that concept of, and you mentioned Firefly, and I've obviously seen it before, but it's that product led marketing, which becomes like viral in a way. In the early days, Hotmail was an early
Mhm.
example of that, where people would get Hotmail email and Hotmail would promote Hotmail. But same thing with Firefly, like all of a sudden we're on a Zoom and I see a Firefly window pop up. Is that an element that you find attractive with these types of companies early on, being first mover, but also having that product led marketing dynamic?
For sure, right? Assuming the product is good, right? The product has
Right.
to be good, where once you've seen it and I've used it, it's all about retention after that too. But product-led growth motions are amazing because it keeps your cost of acquisition so low, and especially on the consumer prosumer side, right? Acquiring new users, if you're having to go through paid, is wildly expensive and only getting more expensive. All of the channels across Meta, Google, like they're really saturated and quite expensive, and users are already just so inundated with different tools. But if you're kind of naturally presented a tool and you're seeing it time after time, taking Fireflies again as the example, you might see it on your first Zoom call and be like, oh, interesting, what's that? And then you'll see it the next time, you're like, oh. And then by the fourth or fifth time, you realize, wow, a lot of people are using it. Maybe I should use it too. It didn't really cost Fireflies that much other than the hosting cost and processing, and that's already been paid for by those other users. And now you're exposed. And once you're on and you're using it, you become an evangelist, whether you mean to or not.
Is that more of a brand situation or just, product development so that you just get more and more viral over time and more valuable? Like you
I
just
think
keep
that's
on over in layers. Is like that how it works?
the more people continue to use it because it's a good product, the more you'll get exposed, right? And it's incumbent upon the Firefly team to make sure the product stays good and ahead of everything else, right? And if every user is a retentive user, they're just going to keep putting it in front of every single person that they meet with. And that's where you really have to do win on product.
Is that a common theme amongst all your companies, or are there some that are word of mouth, some that get like a big brother type of relationship? I'm sure there's a million ways to become successful, right?
A ton of
Oh,
different ways, right? And, I'm talking a little bit more around some of the more AI software type companies. I have a company called Clutch in Canada. It's an auto e-commerce company, kind of like Carvana for Canada. That's one they aren't necessarily getting big network effects. It's a one-time purchase, right? You're not buying 6 cars a year. They do get a lot of word of mouth and brand because if you have a really great experience buying a car, it's probably the second largest purchase you're going to make after your home. If it's a great experience compared to every other like used car dealership that you've gone to or like kind of sketchy, let's meet in the McDonald's parking lot deal, right? You're probably going to tell people about it. That's one way of word of mouth that they get. They do a good amount of, well, they actually haven't done a ton of brand work because they've had just like good word of mouth and kind of overall brand, starting to do more. But they've been really thoughtful in terms of how they leverage both the supply and demand side of programmatic and paid marketing. And that feeds both the same customer.
years ago, I just been thinking a little bit about what you're talking about. This is when I was a younger VC. Sat down with Bob Davoli from Sigma Partners, who's a bit of a legend in a lot of different ways. But one of the things he asserted was that the idea was more important than the entrepreneur, right? That you can change the entrepreneur or the management team, but you really can't change the idea. What do you think about that statement?
I disagree. In part because it feels like companies come in waves. And I swear, when I'll see a company, there'll be 5 companies with the same idea that for some reason everybody's gotten the same idea around the same time. And it feels that way. Obviously, it doesn't always happen that way. But ideas sometimes feel a dime a dozen, right? And I wish I had all those ideas, to be clear. I don't. And that's why I'm a VC. But having the idea is one thing, but really having the team to be able to execute and go after it, build the team, convince everybody to work with you, get the contracts, all of that takes a lot of magic. Now, I could see if, it's a little bit later stage, you said, hey, I found a company with this idea, they have traction. This is not going to be the team that is going to take it to become, a $10 billion company. In that regard, I could maybe agree with that claim. But at the earliest stages, I would much rather bet on the team, assuming the idea is still good, but I want the best team in there always.
I think he was mostly saying that you can have an A team and a B idea, or an A idea and a B team. The A idea is going to win.
That's fair. I think that's
So it's
fair.
sort of like, yeah, that's what I was sort of hinting
That's
at.
fair. I
And
would
yeah,
hope
it's,
the
yeah,
A team with the idea is going to pivot into an idea eventually.
it's sometimes that's hard to do, right? It's hard to change direction. And, especially after you raise venture capital. Well, I thought you were going this way.
Yeah.
Now you want to go this way. Like, what am I going to tell my partners? What are you going to tell your mom?
A tough conversation to have.
Have you experienced that where they just sort of like, you know what, Laura, we sold you, you invested $10 million in us and we're going this way.
I've never had it where it was just such a surprise, right? Where it's like, we're doing this and just kidding, we're going to do this other thing. That has not happened, fortunately. Maybe it will eventually. But it has happened where, we came in, we bet on the thesis, we bet on the team, and things just didn't pan out, right? And I've actually found some of the best founders are the ones who recognize that and are willing to change. Actually, a great example, Kabam, which is that Canaan portfolio company that I worked at in the very early days, they went through 3 pivots before they exited. They sold for almost $1 billion in the end, but it started as kind of like a Yammer type company for the workplace, a place to chat, kind of like Facebook for the workplace. Pivoted from that, then started doing like affinity groups around TV shows and sports teams on Facebook, and then took that understanding of affinity and started making mobile games and Facebook games around movie IP. And that became the $1 billion business, right? But it took a few iterations along the way, but it wasn't just, hey, we're changing right now. It was like, we've tried this. This isn't working. We're keeping our investors up to date along the way. They know it's not working. And now we see an opportunity to move into something new.
That's a great realization sometimes. And then for the entrepreneurs that you tend to gravitate to, is there a type, or is it tend to be serial entrepreneurs? Do they tend to be first time? Is there something that strikes you that is unusual that perhaps a lot of folks overlook?
It's a good question. Across my portfolio, all the founders are quite different and they all spike high on different things. What I will say, they're all good storytellers. And I think storytelling is really important, not just for fundraising. It helps when you're trying to raise money, you have to tell a story, but it's really helpful for hiring. And I think hiring in the early days is so critical. You're having to sell your early employees on an idea before it even really exists, an idea on why they should join you, why this company is going to be, a massive company, what you're going to do. And that storytelling all along the way, I think is really critical. And then your storytelling when you're selling to your customers too, whether those are individual consumers or they are SMBs or they're large enterprises, you have to sell them on why they should go with you versus some incumbent or, the company that they're only working with. So that storytelling, I think, is really, really critical. And it's a skill that not everybody has, right? And I think it can be learned, but that is one that I certainly gravitate to. And then I think founders who know how to build a community of advocates and supporters, right? I think some of the best entrepreneurs in my portfolio are the ones who have a network of founders who are maybe a few steps ahead of them, who they can go to for advice and questions and things like that, but also a group of operators that they can recruit from or recruit around, who they've built this kind of support group that are obsessed with their product or just really invested in that founder so that they will take the call, they will help. It can be a really lonely job, founding a company. And the more support you have, I think even outside of your company, the more helpful it can be. And it just helps you see around corners. Your VCs can only do so much. Hopefully we're doing as much as we can, but there's so many things in building a company where there's not truly a playbook. You just have to kind of find the right person or find the right insight. And the more people you have who are invested in you to help you do that, I think the better.
Interesting. Have you gravitated to a certain geography? Because, people talk about Silicon Valley and how that's such a great place to start, or places like New York or Tel Aviv. Are you like with consumer, you can be a lot of different places
Yeah.
with inspiration, right?
I don't have a clear concentration across the portfolio, and a handful of my companies are kind of relatively remote in the post-COVID era, though many seem to be kind of building in person these days. Probably a slight concentration in New York, given I'm based in New York, and it's just easier to keep tabs on like some of the best talent here. But I have two teams that are in Canada. I have one team, you mentioned Tel Aviv, a lot of their team is in Tel Aviv, but founders are here, the Bay, obviously, and the more that AI continues to be a critical portion of our consumer tech practice, I think the more we'll see in SF. I used to live in SF for many, many years. I've been in New York for about 6 or 7. And AI really, I feel like, came in at the right time for San Francisco. I had stopped spending a little bit. I used to go all the time to SF and was going a little bit less often. And now I'm going quite a bit given all the AI talent there.
Yeah, they're definitely kick saved by AI. Turns out that's a big deal. But I think other areas of the country are also, you're seeing, DeepSeek is an example of, innovation happening anywhere. So I'm actually optimistic that, technology is going to continue to be fairly democratically spread. I think especially in consumer side, potentially, but you would know better than me. But what's the best way for an entrepreneur to get in touch with you? Just email you? What's the best process for them?
People can always email me or hit me up on LinkedIn, but to be honest, it's not that I won't respond. It's just that I will probably pay more attention if it's coming through a founder I've worked with. There is something, whether right or wrong, about kind of a warm intro that helps you pay attention a little bit more. And I've been on the other side of that too. And, I wish it wasn't necessarily the case, but there is something about, to my point on community and like finding those founders who have found all the advocates for them. It's less about who do you know, and it's more, in my mind, how do you think about building your resources? That's probably why I end up responding a little bit more to those.
Got it. No, I think that's just human nature. It just rises up to your bubble a little bit faster versus like a
Mhm.
cold email. It's hard to craft a good cold email, actually.
I
You're
do
right.
respond to them. Some are really good.
I mean, do you pass them off to an analyst just to sort of say, hey, take a quick look at this? You
Yeah.
file all them, you
I
probably
mean,
respond or,
I look at them, right?
yeah.
And if they're on thesis or kind of on the right stage for us, we'll have someone look at it. Sometimes they're not the right fit and we'll just let them know.
Getting back to like the future, do you have any fantastic perspectives on what to expect next or some stuff that's not quite obvious to a lot of folks at this point, and especially in consumer tech? We touched on it a little bit, but I'm going to just push you a little harder. I guess there's going to be a lot of different ways to success, but are there inklings of things that are happening that might be jarring to people that's pretty obvious to you that might not be as obvious to others?
Yeah. I talked about kind of go to market and marketing as
Yeah.
being kind of an area for real differentiation. And I do think that will continue to be the case for a little while. I touched on why wrapper companies aren't a dirty word anymore, right? But I think the double click into that is what we're seeing with DeepSeek, right? Everybody was going crazy a couple of weeks ago because they really changed the paradigm on cost, right? And the fact that these models could be a fraction of the cost of what we're seeing with OpenAI. What that shows to me, again, is that a lot of the model there is becoming and will become commoditized. And I think that's a really exciting thing for consumer businesses, right? It doesn't mean that you have to be building, infrastructure from the ground up. It's similar to kind of cloud innovation, right? On the enterprise side, mobile frameworks, right? These are just going to be tools. And what you can do with them is much more about identifying an interesting sector, kind of dreaming up an interesting idea, and then figuring out the marketing. That I'm excited about because, people have been talking about how dead consumer is for the last 2 years. I actually think it's a really exciting time for consumer right now. We're seeing a lot of interesting businesses. What I think people have to be thoughtful about. People are saying, are they defensible? The defensibility, I think, is going to be in the install base or in the go to market and kind of the lock in from a network perspective that these companies build in. And that's what I'm looking for. And then I think, there's going to be a bunch of sectors that will be interesting to look at. And I think it's across all sectors within consumer. And I talked about education a little bit. That I think is exciting in like think there's so many things in terms of how K-12, college, if college even exists, in 10 years, lifelong learning, professional development, that I think is massively going to change within commerce, right? The idea of agentic commerce and machines being able to understand what I want to buy, when I want to buy it, executing those transactions. That's an example where I think, you know, shopping or transacting, the execution part of it is going to change, but that means there's more space for the branding and the marketing and the influence and the inspiration. Like, how do you get someone to want that thing? Because the purchasing of it will be taken care of, maybe, right? So there's all these things just as an individual consumer that take time to book or to buy or to think through, where a lot of that eventually I think can get abstracted out. How it happens, I don't know, but I think there's going to be some really interesting things to pay attention to.
I was getting excited for you there because I definitely have noted that sort of the tilt away from consumer sort of being left for dead in some people's portfolios. And that seems like a very contrarian time to be leaning in deeper, especially at the earlier stages when there is not as much competition. And that's usually a sign that you can generate alpha there. That's pretty cool. We were talking earlier about Fund 13. I guess you closed that 6 months ago or so.
We started deploying it about 6
Okay. So
months
you started deploying it 6 months ago.
ago.
So you raised it a little bit earlier, but those were tougher times, like among LPs. Did you find any difference in LP response to Fund 13, or is it just sort of no, it's just Fund 13, follows 12?
I will say Canaan has been very fortunate in that we've been around for almost 40 years, actually. I think around 30
Mhm.
years, 37 or 38. So we've had a really consistent LP base over time. That doesn't mean that, you can just raise a fund without returns, without DPI. And so we're laser focused on making sure that is and continues to be what we are here to do. But, it was raised just going into that moment in time where fundraising became much more difficult. And so I think kind of the history of the fund certainly helped. I think the continued discipline around fund size, we really haven't fluctuated that much over the last almost 40 years, right? We've maintained that, $600 to $800 million fund. We never went into that mega fund category. And so for LPs who are looking for, a large fund, but within early stage that's still able to drive a really strong multiple, there aren't that many options in the market. And we're generalists across both biotech and tech. So we get a really nice mix across that.
Is it
Now,
is it 50-50, or is it?
no, it's about a third on the biotech side and
Mhm.
then 2/3 tech. And within tech, the main areas are enterprise SaaS, fintech, and frontier tech.
Are those like just two sides of the? Do the partners talk to each other and opine
Yeah,
about each other's deals?
no, for
Like,
sure. We're all
hey, I'm a
in one.
biochemical engineer. You're not a bio.
Yeah, we're all in one IC and we all meet regularly.
Okay.
Obviously, from an expertise perspective, even, we're not opining on kind of a therapeutics deal from the consumer tech side
There,
deeply. We are talking about, portfolio construction, about team, about deal terms and things like that. And there is a lot of trust across the team in terms of making sure that we have one of the best people in seat to be diligencing these deals. We have deal teams that do the brunt of the diligence work and go really deep. But, it's worked for a really long time.
oh, that's so fun that you get to
Mhm.
experience that other side of not just focused on your one sector, but across the whole continuum there. Honestly, this has been a great conversation. I really appreciate your willingness to join podcast. You definitely brought a different perspective than our typical sort of enterprise SaaS bro perspective. And that's why I was so excited to have you on. So thanks for joining us. Laura Chau, Canaan Partners. Thank you for joining us.
Thanks so much for having me.
Awesome. Good work.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.